late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, we're needing some focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to jump into the macro side of things. We're going to talk about some advancements with the trade war and the ongoing tensions. We get some bullish news. Ideally, hopefully speaking, we won't know until these talks take place. But let's flip over here. We see China rolling out more stimulus and agreeing to trade talks with the US. So this is pretty bullish. The market's reacting positively today. China announcing a barrage of measures meant to counter the blow to its economy from the tariffs and the trade wars, or the trade war, as they prepare for talks later this week. So Beijing kind of taking a preemptive stance here, really kind of just stimulating the economy prior to talks. I think in a worst case scenario, it also gives their certain businesses a little bit more leeway, more time to be able to weather this volatility. We'll get into that further below, but we basically see they outline plans to cut interest rates, reduce bank reserve requirements to free up more funding for lending. They also were going to increase the amount of money available for factory upgrades and other innovation and service businesses. We see here China has announced plans to talks with Treasury Secretary Scott Bessent here, so U.S. Trade Representative Jameson Greer and Chinese Vice Premier He Lifang, sorry if I pronounced that wrong. Basically, these are going to take place later this week in Switzerland. The agreement has come at a time when both sides have continued to be adamant, at least publicly, about not compromising on the tariffs. So it's hard to say what they're really thinking behind closed doors. Obviously, from public statements, both sides kind of unwilling to really budge, just been engaging in this tit-for-tat type trade war where essentially they just continuously raise tariffs on each other. So hopefully we get a bit of, a bit more resolve, a little bit less uncertainty after these meetings. That being said, we have to recognize the potential for it to be kind of a nothing burger, nothing really to materialize on this first single attempt here. Obviously, we do see that the Chinese spokesperson Lin Jian said this meeting is being held at the request of the U.S. side. So they're saying this is a U.S. requested negotiation, not a Chinese request. Previously, the U.S. was saying that they were in talks with China. They've said it multiple times over and over. China kind of responded saying that they actually haven't been in talks with them. There was no negotiations. They were just kind of spreading market confusion. So it's hard to say what is really happening. People changing their rhetoric every other day. Tariffs today, not the other day. We're not willing to move. Now we're willing to negotiate. It's a whole lot of uncertainty, and it's what we've seen in the markets. We continue to see that uncertainty play out. So any form of pressure or coercion against China will not work, Lin says. China will firmly safeguard its legitimate interests and uphold international fairness and justice. So they're not going to go to this negotiation and get walked all over from the sounds of it. They're going to ensure that they have at least some of their demands are kind of met, and hopefully we do actually get some negotiation and not just, nothing out of it and both sides kind of go off on their own, continuing in the tit-for-tat trade war. That's not what we want to see. We want that uncertainty to leave the markets. So by easing credit here, China's leaders are providing a policy buffer for exporters, which can help in the near term. The authorities are prepared to have a protracted negotiation. So if you're not sure, it just means a long, drawn-out negotiation. It's not going to be resolved in a few days or a week. It could be weeks. It could be months. Who knows? We have to just continue following the situation as it evolves. Both the economies have been showing signs of strain. That being said, the U.S. economy has had negative GDP for the first quarter, whereas the Chinese economy has had positive GDP. So interesting note there. The meetings could offer an opportunity for both sides to dial down the current prohibitivity level, or the current high prohibitivity level of tariffs. So essentially, tariffs raise the cost of import, kind of puts a strain on supply chains, as well as causes increase in costs to the customer. We've talked about that. It is unsustainable as described by Bessent. It's a little funny that they're describing this as unsustainable when they were the first ones who came out and threw that big punch. So it's kind of funny, you come out, you punch everyone on the playground, and then you're kind of trying to play the victim now. It's pretty funny in my opinion. I think the way it happened, They kind of came to the poker table. They didn't have the best hand. They tried to bluff their way, and then eventually they got to the bigger table, and the big players called their bluff. China has a pretty insane amount of resources when we break down the numbers. We've talked about that. A lot of resources that are necessary for the technological and military innovation that we see in the West. So both sides heavily reliant on each other. I almost think of it as kind of the East is almost the pick and shovels. So they provide all the infrastructure, all the parts, all the minerals, everything we need, and then the West, kind of with its more geopolitical safety or relative geopolitical safety, there's a lot more kind of development here on the front end, user interface applications, that kind of thing. So I do think China and the US, their relationship is integral to each other. The US being a major importer of Chinese goods and the US being a major customer of China. So it's a mutual relationship. You know, this whole trade war is just negatively affecting kind of everyone involved. So no one's really winning right now. We want to see more negotiations. So we see a durable resolution remains elusive in the eyes of Morgan Stanley. It's going to take time. And then here's where we saw the U.S. economy contracting by 0.3% in the first quarter, whereas the Chinese economy grew at 5.4% annual pace in the first quarter. So Chinese economy growth outpacing the U.S., which is currently contracting. We see China's reverse repo rate was brought down 0.1%. Their lending rate to commercial banks was cut down by 0.25% to that 1.5% level. The required reserve ratio was dropped by 0.5%. So essentially this is going to free up about $140 billion in excess cash, which can help stimulate that Chinese economy. And they've reduced interest rates on their 5-year housing loans. So really just putting in these measures to allow a little bit more leeway, a little bit, you know, they're able to withstand, a bit more volatility on kind of the economic side of things with these measures. And interesting to see that. We're going to flip over to our chart though. Let's see how it's affecting the markets. So today, the stock market about flat on the day. It was up about 0.5%. We're starting to flip red. So we'll see kind of what happens. The US 10-year down a little bit, dollar flat on the day. The VIX still remaining right here at that 24. It's holding those higher lows, not above the kind of that 30 elevated dangerous territory that we talk about. But look at that RSI curling back up. The vortex looks like it's bouncing off there. DMI positive momentum building, and MACD looks fine. So we could see more volatility come back. We see the 10-year here kind of just continues in this consolidation pattern. We'll have to continue following that. Hopefully we start to see it breaking down. But we're going to focus on the SPY today. The NASDAQ, the SPY, they're both going to look very similar when we're talking about the charts. So what we see here is I have the chart. What we look at is just, I want to find similarities to other instances in the market. So what do I see here? We've got this move over here where we had our bear market cross of the two moving averages. So that 50-day breaking below the 200-day. That's what we saw right here. And what we also saw, look at this increase in selling volume and then kind of outpacing. The buyers weren't able to really step in and fill that void. So big increase in selling volume. Buyers not able to follow through and replace it, and then sellers stepping back in, continuing that downwards move. What do we see here? Kind of slow buying volume, kind of indecisive in through here. Sellers outweighing buyers, and then we see a decent amount of selling volume right in through here, and then right here selling upticks. That capitulation caused that massive drop, and we see buyers step back in a little bit, but not convincingly, where I think, this is the move up. The bottom's in. Even here, look at these candles. This was more buying volume here than what we're seeing right through here. And we ultimately, look at this, we came back, we broke back, we poked above the 200-day off after that bearish cross, but ultimately continued that downtrend move, and that bled. So even from these lows to the actual lows, we went down another 15%. So why I think there may be some similarities here, we've got that bearish cross, we've kind of got the downtrending price action, we came back, we hit this trend line. Let's take a look at our momentum indicators. So we talked about the volume looks a little similar here. Look at this MACD here, kind of coming from the oversold territory. Just because we're oversold doesn't mean that we're going to new highs. We've talked about this as a lagging indicator, especially here, oversold, but all we got was this little poke above the 200-day. And then RSI topping out right here. So RSI also similar level, a little bit lower. Look at the DMI here, very similar setup where we had that orange spike above the blue line, and that's that bearish trend favored. So also continues to look like that. If we zoom in a lot too, we also see that orange line kind of bouncing off the red line. That signals to me that the bearish trend is potentially going to continue. Our vortex indicator, we did see it break above here, so we're going to see if the blue can break above the red here and hold it durably. That is that uptrend kind of movement here. But to me, we'll take a look at the lower time frame. So let's look at the 12-hour and see how those look. The 12-hour or the lower time frame can give us a signal of the higher time frame. So for now, we do see that on the DMI, the bearish momentum or the bearish trend is still favored, but on the vortex, we got that little move here. So we'll see if this curls back up. Again, we can flip to the even lower time frames to see what's likely to happen. So I do think we could continue to get that little push up on the low time frame. On the higher time frame, that 3-day, that weekly, we are still in that potential to continue this move to the downside, similar to what we saw in those prior that prior move over here. So just pay attention, and we want to be able to take advantage if we do get that. So we do see, right here, we saw this move come, poke above the 200-day, and then ultimately reject back below and continue to the downside. If we see something similar play out right now, look for that target up here. You're looking at about 590, probably down to about 575. Price could poke out here and then come back and retest these levels down here. We talked about kind of high time frame versus low time frame. When we look at the weekly, this chart doesn't look like I've missed anything to me, in my opinion. So people say, how are you okay with missing the lows? Because we're not sure that these are the actual lows or these are the actual lows. We took a chance here because of the technical support, and it worked out very well. So we want to see that continued higher low price action hold for that confirmation. If we can get a higher low kind of maybe in this zone here, let's take our Fibonacci, see where it lines up. Yeah, same thing, that 618 Fibonacci. If we come to 531, we can hold here, get a nice bounce. That's that higher low, higher high. 3 weekly points on that uptrend. We could sustain that move to the upside. So if you do get that opportunity, looking to kind of build a position in here between the 618, 786, stop loss below support, protecting that position. If we break back under here, that's that continued downtrending price action. So pay attention to that. Other than that, we're getting a nice little bounce here from a previously talked about zone. So we did talk about this zone right in through here, this gap fill. We came back, tagged it, got a little bounce out, but we're in that lower high, lower low price action. Not really interested in buying into this. This is the more favorable entry down here in that 530 territory. And then we look at the indicators here. Bearish momentum being favored on the trend and bearish momentum on the MACD and the RSI. So low time frame not looking too good. High time frame looking a little bit overextended, like it could come back a bit more, but we could also poke out a little bit more back above that 200-day. That's a 4 to 5% move. Otherwise, looking for that entry back here in the more favorable area of support. Gold here we see down today, but getting a nice bounce. Look at that. So we topped out here, came down, held the higher lows. So gold continues in its uptrending price action. Not ideal for risk on assets. Let's flip to Bitcoin quickly. Bitcoin did get almost to 98,000 yesterday. So nice move on that bullish that bullish news. A nice little move there. We take a look. We're kind of stuck between support and resistance right now. We're going to take a look at the low time frame here. And we did manage to break out of this trend line here. We're holding it, so we could actually continue here. Volume's looking a little bit better, but still not super convincing in my opinion. Low time frame trend, MACD, RSI a little bit oversold, but the DMI is showing that bullish momentum. We want to see that blue line break above the ADX, like over here, for that stronger push up, and we want to see this blue line continue to hold above there. So when we see look at this. I've showed you this before. We take this zone here where the blue is durably above the red, that is an uptrend, and then when the red is durably below the blue, that's generally a consolidation or a downtrend. So if we can continue to see this hold, we see that DMI break above the ADX. ADX is above 25, which does signal a pretty decent trend, and we want to see our continued higher lows hold. You know, Bitcoin could continue up. That being said, we have this resistance zone up here. I'm not really chasing at this point. Let's take a look at the daily, and we see we are still extended, so we're just patient. You know, lots of the times we get on these crazy extensions. You know, I don't rush into any positions, just waiting patiently. If price comes back to this area down here, definitely look to take advantage of it. So that's kind of 79,500 up to 83,500 or so. And that's kind of going to be that spot accumulation. Let's continue watching it. Take a look at the daily indicators here and just see. So looking pretty good on the daily, looking a little bit oversold on the 4-hour, and the weekly is kind of a little neutral-ish, I would say. We have a lot of work to do. There's still all that volatility, uncertainty in the market, but Bitcoin is looking pretty strong, showing good relative strength. We're seeing that 50-day curling back up, so a good move here. But let's take a look at the prior cycle really quick, just to also get a good representation, because this might not be the first time that we've seen this. Look over here, we broke all the way down. The 50-day was curling back up, but it was ultimately just kind of a rejection and continuation to the downside. The only difference I see right now is where the 50-day is starting to curl back over. You know, the 200-day is already way above it. That's what rejected it that time. When we look right here, we're actually above the 200-day and above the 50-day. So a little bit better price action structure right here, as long as we don't reject and kind of just dump back below and get rejected on the underside. So that's what I want to look for. If we see that happen, that's going to be a major warning sign to me for the cycle. It could mean we do go into our bear market. So watch for that to happen. But right now, we're above the 50-day, we're above the 200-day. They're curling up. If we see that 50-day start to break above the 200-day like we did over here, that's another bullish signal. So pay attention for that and look to take advantage of the opportunities. Right now, stuck in no man's land. Let's wait. Either we're going to go up here into resistance, see what happens, or it will come back, retest our lower support levels, and go from there. So thank you so much for watching, guys, and I'll see you in the next one.